Hey there, traders. Jamie Saettele here. Today is April 8th, 2020. And today we're going to take a look at the British pound. Got a decent trade set up here. No entry just yet, but something specific to watch for. So here's a little trick when it comes to Elliott. Okay. So let's call this, okay, you had a 1, 2, 3, 4. And we're looking for a 5, okay? The origin of wave 1 and the end of wave 2 is what I call the original trend line, right? It's the first line that you can possibly draw off of, 2 points after, the trend has shifted. Now, obviously, you're not drawing this when this happens because you don't know what's going on here at this point, right? For all you know, you could keep going lower. The real key to this that you are in an impulsive wave higher or a change in trend has occurred is when you trade through. So right here, that would have been on March 26th, when you trade through what I call the top of the corrective channel, right? Because at this point, now you've traded through this, so you're probably not in a correction anymore. You are now in a range expansion, right? Meaning trend has changed. So, if you think of, if you're familiar with Elliott at all, you'll know that counter trend moves are A, B, C, so 3 waves. And if that were to occur, a lot of times you have an ABC rally that channels. So if this were an ABC rally, you'd expect it to stop around here, okay? So that didn't happen. Now, fast forward, to yesterday, so several weeks after we had reason to believe that the trend had changed, and we actually came back and we tested the top side of this corrective channel. Okay, that is a lot of times in Elliott, that's where the wave 4 low will come in. So you draw your channel to your original slope or original trend line, extend it off the wave 1 high. You have your channel now. You go through, you come back, you test it, albeit it was several weeks later. Okay, so that's a little trick for identifying the end of a 4th wave. Now here's another trick for identifying a 5th wave target. Take that same angle, that same trend line, and extend it off of the wave 3 high, and that will give you a target area for wave 5. And in this case, it actually lines up really well with former supports, which you would kind of expect to, end up providing some sort of resistance anyway. And that's going to be, the old lows, right? So November 2019 low, and then of course, period of lows and congestion around February. And that's going to give you basically 2720s to say 2770 or so. Okay. Now near term, chasing here is kind of tough. One, it's just bad trading, bad practice. You're at the top of a range anyway, right? So if you're going long here, you're kind of buying into resistance. So what you want to watch for, what I will watch for, is actually support kind of down on this line somewhere. Maybe you end up coming back here, this being pound, which loves to, kind of clear stops. You would be taking out this low, which I'm sure a lot of people are trading against anyway, and then you'd be looking for support probably around, say, 2240. In any case, let's say this does play out, 2240, you're stopping out at, say, 2160, 80 pips of risk, and you're literally putting, giving yourself a shot at close to 500 points on the upside, right? So that's a pretty good reward to risk ratio there. That's over 6-to-1 at that point. So if we were to get this, so this is a setup that I am following the rest of this week and probably into next week. And that should probably, if it's going to play out, it should play out by next week anyway. So there we have that. And one reason, by the way, to kind of suspect that we get maybe a pullback in pound. So this is the US dollar index. This is the FXCM Dow Jones US dollar index. And you can see here that from this week's high, you do have a very small 5-wave drop. So the implication there is that you get a little bit of a pop, right? Just maybe come back to this area, 12,640, 12,650. And British pound is a quarter of this index. So it does have a good influence, whereas if you're looking at DXY is 57% euro. I think pound is maybe 9%. It's either 9 or 11 or 13. I don't know. Yen's up there, 11 or 13, and pound's one of those two. So in any case, it would make a little bit of sense to me just to kind of get a bounce in the dollar generally, and then you'd look to fade that for a short-term trade. All right, so thank you very much. Take care, be safe, and I will talk to you later. All right, take care, bye.